Hey, good evening, everybody. This is Paul coming to you from East Tennessee. Tammy and I were out here. We're still out here checking out the house and the construction. It's been very wet the last few days, but they're starting to fill the garage with gravel. You can get that ready to pour the slabs for the garage next week. But anyway, in today's episode, Dave and we kind of discuss, why we don't really care from a financial perspective, from an IBC perspective, who wins this next election coming up. And that, everyone knows how we think, but we fully intend to be in better control over capital, over our personal economy 4 years from now than we are today. And that's regardless of who's sitting in that seat. All right, so give it a listen. Let us know what you think, and we'll see you next week. Thanks.
Hey, I'm Dave.
And I'm Paul.
And this is the Wealth Warehouse Podcast. Paul, long time no see, man. It's been a few days.
I was going to say, I feel like it's been forever since we've done this, but it really hasn't.
No, but we were lucky enough to spend some time in person last week in South Dakota. Annual hunting trip. That was awesome. I think we bagged 114 pheasant in 2 days.
That was, that we shot our limit, and everyone, there was a lot of good shooters.
Everybody got birds, even Anthony.
Yeah, got his first blood.
Yeah, same for two of my boys, so that was great, man. Yeah, we got that group is growing. We're almost getting too big. It was almost like a battalion walking through a cornfield out there.
Yeah. Ty, I look forward to that trip every year. It's great. It's a lot of IBC people and guys that I want to spend time with, and can spend every day with and be happy. It was just great.
Yeah. Actually, that we're going to hit on that during the episode today, but definitely spending time with people, like-minded people. Almost everybody there practices the infinite banking concept. I don't think everybody, but nearly everybody, maybe everybody.
I think literally everybody.
I think you're right. Yeah, I think last year there was one or two people that didn't. This year, everybody did.
Right.
And they're not all agents.
Nope.
But they're all open-minded, critical thinkers who gravitate towards controlling their own capital. And when you do that, man, the conversations are I think that's why it's so fun. It was so energizing being around all of those men, because when you're at home, there's very few people typically that you get to spend time with on a daily basis who think like a banker. But when you get around a whole group of men who think like a banker, everybody thinks like bankers, man, the conversations go so many different directions, and they're all interesting.
Yep, we pretty much explored the limits of many different topics.
Yeah, we did. You got to be open-minded.
Yeah. I love it. I love it, and of course, whatever the truth might be about certain topics, I don't care. It's just fun to have the conversation about it.
Yeah. There's some other things that, in a sense, we don't really care about. And that's what we're going to hit on today in this conversation, as we transition here to the meat. We're in the middle. This is September of 2024. We're less than 2 months. What are we? Maybe 40, 5-6 weeks from the election. And you've got, the presidential election going on. So it's election year. And there's so much back and forth and all this stuff, and people, the doom and gloom on, hey, if my side doesn't win, this is what the world is going to be like a year from now. So one thing we don't care about, as far as our personal what would you call it? Your personal ecosphere goes, One thing that doesn't matter to us is who the president is, because the president
No,
doesn't control my personal economy.
right. You know, the last, let's see, let's do some math here. The last 12 out of the last 16 years, you've had a Democrat president. And this isn't a political show, but, um, you know, my life insurance contracts are doing just fine,
Yep.
despite the economy being all over the place. And when I say that, I really think that Federal Reserve policy has been silly, and it's a silly thing to have a central bank, but that's a totally different discussion. But anyway, Fed policy, you know, COVID years, I mean, just screwed a lot of things up,
Yeah.
right? Ate into a lot of gains that people had made. Like, oh, look at I'm doing so well in my portfolio. Yeah, but everything's more expensive, so you really didn't make any money.
Like 25% more expensive. So how
Yeah,
much did you make in your portfolio to make up for that? And how much of that can you access today to pay for those rising costs?
right. And how much of
Most
that is
people,
going to be
not very much.
taxed when you
Right.
go to take it out? So anyway, and again, I'm not speaking for everybody. I'm just speaking in broad strokes here, talking about the typical American and what they have faced. I was reading an article today, Dave, and we talked about it before we hit record, where these people up in Indiana, just normal, look like working class, normal people, but they spend 50% of their income on their mortgage. Their
Wow.
mortgage is at like 7.5%, 8%, which in the course of human history is not high. I know everyone thinks rates are high. They're not. They're just higher than we're used to over the last few years because they were too low. That's why the prices of everything went up, aside from a couple other reasons, government spending. Anyway,
Yeah.
so anyway, but yeah, none of it really matters when you're practicing IBC. You're well capitalized. You're building capital in a guaranteed contractual manner. I'd sleep totally fine at night. I was having that conversation today with a client of mine who's on his way to becoming his own banker.
Yeah.
Um,
Right. And if somebody pulled me, one of these news reporters walked up to me, put a microphone on my face and asked me, hey, are you better off today than you were 4 years ago? I'm going to say, hell yeah, I am. But you know what? I'm better off in spite of the politics, in spite of what the Federal Reserve has done, in spite of what government bureaucrats, the mess they've created. Yes, I'm much better off now than I was 4 years ago. And it's got nothing to do with anybody but really but me and what I've focused on and the people I've surrounded myself with. So
exactly right.
yeah, that's what we love about infinite banking is despite the current political or geopolitical climate, my access to capital continues to increase every single day. Does yours? That's the question I would ask.
What's cash value?
Yeah. And my access to capital is my cash value. It increases every single day. I log in and check, it's gone up.
And if you're new here, what Dave is referring to is cash value of his dividend-paying whole life insurance contracts, which is the present value of the death benefit or the equity of the policy, as another.
The equity of the policy. Yep. It's the equity you have in the death benefit. So, and that's where we choose to store our capital. And why do we want to store our capital there? I mean, can you just store it in the bank or in a CD or in the walls of your house?
Sure, you could do all those things.
Yeah.
And we've covered the attributes of dividend-paying whole life insurance on this podcast in depth, and you can read Nelson's book, Becoming Your Own Banker. But I like the independence that owning dividend-paying whole life insurance and practicing IBC affords me and my family. It's truly privatized banking at the you and me level. And if 10% of us could across the country could do it, if we get 10% of the population to do it, things would be a lot better. Anyway, so that's why I choose to do it. I want independence from the system. How does that sound?
Right. So I don't have to be affected by the volatility of the system. And I don't need
Right.
to be under the purview of the system, them seeing every little move I make and where all my cash is stored and being able to change the rules on me. They can't do that.
That's right.
Yeah. And that's a great feeling. So there's the peace of mind that comes with that you can't take away. So, why do so many people respond with a no when they're asked, "Hey, are you better off now than you were 4 years ago?" And people instinctively, depending on which side of the aisle they fall, more so if they're in Trump's campaign, of course, they're going to say, "No, I'm way worse off than I was 4 years ago." Why? And whose fault is it?
Yeah, I mean, financially speaking, not too many people could say that they're in a better position. Yeah, I'm sure like their 401k balances look nice because they've rode that wave, which continues to just go up, or maybe it's stabilized now. I don't really pay attention to it, um, but everything's more expensive too. Like the cost. I mean, just the cost of real estate, and I've talked about it before, but it's ridiculous. Like when you look at the prices that our parents paid in the 70s when rates were high, but prices were not. Like my parents' first house was 38 grand. That house now is $500,000.
Right.
It's no better. It's still a 1,300 square foot house
Yeah.
with a finished basement, though. My dad finished it. But anyway, it's the purchasing power. The typical American dollar has been. It's going to be less tomorrow than it was today.
Yeah.
And so no, I don't see how financially most people are better off than they were 4 years ago. I just don't see it. You may have individual circumstances that has allowed you to be. Maybe you started a business, was real successful, or whatever you're doing. You got a promotion at work. But generally speaking, if you're that guy or gal working that 9 to 5, balancing family life and kids and obligations and whatever, you're likely financially not better off.
Yeah. Well, even if you were making more money today, the latest I saw on doing a little Google research is it takes, based on what state you live in, somewhere between $200,000 to $300,000 a year for a household of 4 to live comfortably today. Which is crazy to think about. Just 10 years ago, getting out of the military, getting out of active duty, a $120,000 a year job, you're living very comfortably as a single income house of 4 or 5. I had 5 living very comfortably at just over 6-figure income.
Right.
That today it'd be very difficult. Let's just say that. And it's got nothing to do with it's not our fault, right? It's not the American citizens' fault, except that we've allowed these clowns to continue to perpetuate their spending and everything else without putting up as nearly as much of a fight as we should be. But yeah, purchasing power is decreased. Inflation's caused the increase of the cost of nearly everything, almost everything. Like I pay a ridiculous amount of insurance every month, like car insurance.
Yeah.
So I guess that's what happens when you get 2 kids that turn driving age.
2 kids driving, young boys. Yeah.
Yeah.
It's a big,
Can't wait to kick them off my policy. Yeah. Big time. But I would ask yourself, in fact, this would be a good poll for our clients. And if you're listening and you're a client of ours, and especially if you've been one of our clients for several years, I would love for you guys to write in and tell us, are you better off today than you were 4 years ago? And if so, why? If not, why? But what I can guarantee is anybody who's been our client for a number of years, they have more cash value than they had when they started. They have more access to capital, which means they have more access to opportunities that come along. They don't have to participate in the stock market if they don't want to, because there's other ways to grow your wealth outside of that.
Yep. Without question. And, we've talked about, opportunities that you create yourself, or maybe you have the need to finance something that you need to do. Right. And we've had clients start businesses. We've had clients, unbundle their escrow, from their mortgage and stuff. We all kinds of just little things that have added to their efficiency or increased their lifestyle, but that have participated in profitable opportunities and we've had these conversations individually with them that they never would have seen. They never even would have thought of doing, but because they were putting money that was otherwise being locked up in a 401k or locked up in an IRA, because they put money where they could get at it, their their view of the landscape, the financial landscape, was completely changed, and that's wonderful. And now, like I would venture to say, our clients are in a better position than they were 4 years ago. I know
Yeah.
I am. I mean, I was your first client. I'm in a better position. I've been your client since late 2018. I'm in a better position now because although you really should have told me to stop putting money in my TSP. I had somebody else told me
I'm
that.
not a financial advisor, Paul. I don't give investment
That's true.
advice. So, yeah.
But anyway, he didn't push me to pay more premium. I wish
Yep,
he had.
could have done that, but I was at the beginning of my journey as well.
He also didn't know what he was doing. That's all right.
Yeah.
He does now. I could vouch for him now. And I didn't know what I was doing either.
You know what's cool? You started those policies 4 years ago. Look where they are now. Did they get better and more efficient, or did they get worse and riskier over the last 4 years?
I mean they are now, every dollar in premium that I pay is now producing more dollars than I'm paying in premium in those individual years in cash, right? So,
Awesome.
I'll just throw out a random number here: $15,000 of premium, producing $19,000 of cash value in the same year. So a really nice return on my premium, which that's not what it is, but
Right.
anyway,
You did that in air quotes, the return. Yeah.
I did air
now,
quotes for those.
What about another 4 years? Whether it's Kamala or Trump, who is president for the next 4 years, how is your policy going to behave any differently?
Yeah, it won't. It's contractually guaranteed. And throughout human history and the existence of participating whole life insurance, these life insurance companies, which are very old and very well run and have billions of dollars, have weathered, I would argue, worse times in history.
Right.
World wars, both of them. The Great Depression, right? And there's if you could look at there's a bunch of panics in there, and then there's 87. I mean, there's just all kinds of stuff. And then, of course, the Great Financial Crisis is the, I guess, contemporary one from 2008, right?
Yeah.
Didn't matter.
Yeah.
The company that we write our business with, most of the business, has paid a dividend like 118 years in a row.
Yeah.
That's where I want to put more. That's where I want to put all of my wealth. That's where it's going to go first, right? So, yeah, not worried about it. Policy's going to look great 4 years from now, 12 years from now, 40 years from now. If I should still be alive.
You will be. You're Italian. You got those Italian genes that'll keep you living for a long, long time.
Right. Yeah, my grandmother's 97.
Yeah.
But yeah,
but
it's gonna look great. Policies are
You're
gonna
right.
look great.
So dividends, you said dividends, and maybe some people don't understand what those are if they're just listening for the first time or just learning. But those dividends are just a return of profit. It means the company's been profitable for, I think it's like 120 years. And, there's plenty of companies out there who've been profitable for anywhere from 120 to 175 years.
Right.
And is that a bad thing? Oh, it's profitable. So if you have the zero-sum mindset that, if they're profitable and I'm giving them money, then I must be losing. Nope, because I'm an owner of the company. If you're an owner of a company, do you want it to be profitable or not?
Profitable.
Profitable, 100% every single time. And guess what? You're an owner of the company if it's a mutual life insurance company and you have a dividend-paying whole life insurance policy with them. So Paul and I are owners, and we love it when they make a profit because that profit gets returned to us in dividends.
Yeah, nothing
Tax-free.
wrong with that. I mean, we're
Right.
capitalists, right?
Right. What business can survive without being profitable? Only government-run businesses.
Only
Like
the
USPS
government.
right next door.
Oh my, yeah. Amtrak loses billions
Amtrak.
every year.
Yeah,
They both do.
pretty much any government business, they don't turn a profit. they're the only ones that can still be in business without creating, without turning a profit, period, with only consuming, not producing,
Yeah. So
on a net scale.
just work harder, everybody, so you can continue to fund those enterprises.
Yeah. So, so I like to look at it. So over the next 4 years, if you focus on your own personal economy, which is what you and I have really done over the last 4 years, is what can I control? Well, one thing I control is my capital, if I choose to. And then what spawns off of that? Man, if you control your capital, there's so many things that come your way. If you don't, yeah, your 401k, maybe it's doing great. Does that help you pay for groceries today? The increased cost of a transportation? No, it doesn't. And it actually restricts your ability to do so because you're putting money out of arm's reach. You can't touch it.
So on the local radio station here on Sunday mornings, and I've talked about it, they have like a good program for like government workers and stuff. It's actually very well hosted. Guy's name is Winter Troxel, I think that's literally his name, and I've never looked him up, but very, very helpful. Seems like a guy I'd like to talk to. But he had a case of this woman, career government employee, 40 plus years in the service, as a GS employee doing whatever. She had over $1 million in her thrift savings plan. Guess how much money she had in a checking account?
$300.
You're close. $1,000.
Wow. That was
she
it.
She had no liquidity. Zero. All of her money, literally. I mean, she was disciplined, all the things, right? Doing what she thought was right, but she had no liquidity. She had no way to respond to
a disruption.
She'd have to retire. She could get a TSP loan for $50,000. That would be the max she could get out of that $1 million, right? So just all the restrictions that we know and we talk about. Mm-hmm. But I couldn't believe it. I was like, wow, I'm gonna mention that on the podcast, and I just did.
What did Winter Troxel have to say about that?
So what's interesting is he's not your typical host that you hear out there just like, oh, do this, do that, max your 401k, max your... He's like, you need to have assets positioned that you can get to. And I was like, yeah. I appreciate that. And of course, I don't think he's ever mentioned in the limited time that I've heard like any, whole life insurance option or anything like that. I've never heard that from any of these programs. It's probably a CD, right? It would be his method or something, or a savings account. But
yeah.
So, but the right mindset, just the wrong product, right? We like our liquidity in a private asset, dividend paying whole life. So
absolutely, one that I can access while it still continues to grow.
Yeah, and is that the magic? I mean, I don't know if that's the magic.
Like that's pretty amazing. Where else can
I
you
love
do that
explaining that to people?
Unless you own a lot of tier one, like a lot of investment grade stock, like Apple stock. You got a lot of that. Yeah, you can access capital from an asset loan from a bank while your stock continues to grow. But outside of that, where else can you allow your asset to continue to appreciate while you're leveraging? I mean, your home, right? A HELOC on your home, if the bank approves it, and of course they control the terms, so they can call it in whenever they want.
Sure.
So you don't have a whole lot of control over it.
And let's face it, folks, there is no better loan that you can take that is not coming from a life insurance company, right? So the dividend paying whole life product that we own and that we use for the infinite banking concept has the loan provision. There's not a better loan that you can get in the market. You can try. You can go to a bank and say, I want a loan that's unstructured, has no repayment schedule.
See what kind of response you get.
Yeah,
that's hilarious.
That product, one, doesn't exist, and two, they're going to laugh you out of there, right? Or it doesn't exist. And I remember looking at personal loan rates when the Fed rate was zero. Right, Fed rate was zero. These personal loans from a bank that we both are probably members of, excellent credit, so 740 or above, whatever it was. The loan rate then was 12% for a personal loan.
Wow. Yeah, I mean that's about what you're seeing right now, though. That's pretty crazy.
Yeah, I don't know if they move them much because guess what? They don't want you taking it
Yeah, they don't.
because
They
it's risky.
Yeah, well, that's a
But
great
it's
thing
fully
about
collateralized, I'm sure, right? I mean,
yeah, and
it's
that's the great thing about the life insurance loans. You know, the life insurance company is a company that I'm an owner of. Their loans are impossible to default on. Like they're guaranteed. They're guaranteed
yep,
loans. They're not going to default.
correct.
So, pretty good deal.
Yeah, and they're unstructured. Like I set the amortization schedule.
Yeah.
If I want to make a payment this month, great. If I don't, great. We should
Yeah.
pay our loans back though, religiously. Just saying.
And as quickly as you possibly can. Why not? Why wouldn't you? It's actually fun. You gamify it. Like how quick can I pay this loan back? Because guess what? I know I've got access to every dollar I pay back. So why wouldn't I pay it back as quick as possible?
Yeah. So if you're a Dave Ramsey person and you love just throwing extra money down the toilet against another bank's loan or your car payment or something or your mortgage,
Yeah.
this is the same thing except you get to reuse those dollars.
Yeah.
You'll see these dollars again
Exactly.
and again.
So, let's kind of wrap this up with when you bring the focus to your own personal economy, it really doesn't matter who the president is, period. Right? Doesn't matter who's in charge. Because frankly, I mean, Congress has a lot of say over the economy, the Fed, the president.
The big
I like
banks.
these campaigns they do. Like I'm gonna no taxes on this, no taxes on that. Like you don't have any right to do that. You're the executor. You enforce laws. You don't make them.
Right.
Congress has to do that.
Talk
So
to your
give me a break.
congressman about that.
Yeah, talk to your congressman. The president can't make those rules.
Although I'm with you. We should not have an income tax.
Well, who's
We
to
got
say
on
do, Paul?
fine without one before 1913. Anyway,
Yeah.
sorry.
So, but regardless of that, of who's in charge, because of infinite banking, my cash value has increased every single day since January 20th, 2021. I don't care what you say about Bidenomics. My cash value has gone up every single day. When Trump was president, my cash value went up every single day. Never had a single day of loss. I've never
Nope.
woken up and said, oh, man, I just lost a bunch of money today. That's going to
Yep.
take a while to get back. Nope.
Yep. And and of course, your policy is going to perform, right? The only thing you have to do is a unilateral contract, right? You just pay your premium. Monthly, quarterly, biannually, annually, however
Annually,
you pay
which is
it.
what we recommend, if possible.
Annual is the best way. If you can get
Yeah.
if you start somewhere else and you get to annual, great. That's the goal. But it doesn't really matter. I mean, it does matter, but paying premium is the most important thing.
Yeah.
But anyway, one of my clients was looking at his annual statement, comparing his original illustration and the declared dividend that he got this year, and he's like, "Wow, it was a little bit more than the original illustration." I'm like, "Hey, how about that?"
Yeah. Better than advertised.
Yep, better than
Yeah.
advertised.
That's nice. What else has gone up in the last 4 years in your policy besides cash value?
The death benefit's gone up.
The death benefit, right?
Sure does.
Right. And that is that's means the wealth transfer, the tax-free wealth transfer that's gonna happen when you graduate has increased.
Has increased.
Yeah. You've
Yep, no
created
question.
more wealth.
Yeah, and since it's going to be free of income tax for my beneficiaries, which is very nice. You can kind of upgross the value of it, can't you? It's not like you're passing on some taxable item, right? Like I got a client that inherited a couple of clients, I think, that inherited like their parents' 401ks.
Yeah.
And,
They got to spend them down like the next 10 years and
Yeah,
pay the
it's
taxes
just they
on
keep
them, and it pushes
changing
them
the
over to
rules
certain
and
brackets.
paying taxes, and yep, it's just
Yeah.
no
And then you got to be
control
very
over that.
And you got to be very careful about
You better
how
be
you
right.
do it, and you better be keeping your records. Yeah, exactly.
Yep, it's what a pain in the butt. And again,
So
I used to
complicated.
think like the self-directed IRA, all right, it's the best thing ever. Oh my gosh, I can decide where the money's invested, and yeah, you gain back some control, but you're still dealing with the red tape of this bureaucratic,
Yep.
IRS coded thing called the 401k or the IRA, whatever, to the record keeping. transactions at arm's length, whatever. It's just, I hate
Yeah,
all that. I
I
don't
know.
want to do any of that. I file an extension every year. I'm doing my taxes right now. What a pain. And
Yeah.
of course, I had to wait on K1s from everybody.
And you know
Sorry.
what most
Anyway,
people want in their passive income years, their retirement years?
simplicity
Simplicity.
and reliability, I would say,
Yeah, I
or
just want it to be
certainty.
consistent
Yep.
and simple.
Yep.
Like, I mean, talking to my mom, the last thing she wants to do is think about money and have to
Right.
think about all these different nuances of how to take it out, how to treat it, how much to take out every single year. She just wants somebody to tell her what to do with that, which is the way it should be. She spent her life working for a living, not learning about money.
Right.
You're too busy working to learn about it. But yeah, but what else has it increased over the last 4 years? Our access to safe and profitable opportunities. Because when you have
Yeah.
capital, opportunities
Opportunity's
find
gonna
you.
find you.
Yep,
Yep. No question. And I would say they're safer opportunities too.
for sure. Because you have more control over them.
And we've talked about the value of having this private pool of capital that gets bigger every day, and then of course on an annual basis, as you look through the years and how large your little pool gets, it becomes a big pool. Things that you did 5 or 6 years ago that you would have been very interested in become uninteresting, which is
Right.
it's weird. And you trust me, those of you paying adequate premium relative to your income, you will experience this over the next 3 to 5 years. You'll be like, I'll pass.
They're going to be like, oh, they were right. Paul and Dave were right.
Yep.
Opportunities find me. And I don't have to get excited about every single opportunity. Somebody slaps down a pro forma in front of my face showing that I'm going to make 40% returns. That doesn't excite me.
Yeah,
It
I
doesn't
had
need to
FOMO.
excite me anymore.
I would say I had FOMO from like 2017, 2016, 2017 through maybe 2 years ago.
Yeah.
I really did. I don't have it anymore.
Nope. I'm fine sitting on capital waiting for the right thing to come along.
Right.
Yep. No rush. I'd say one of the most powerful things, like we started talking at the very beginning of this episode about, hanging out with a bunch of good dudes in South Dakota for 3 days, is that my circle is really tightened.
Mm-hmm.
So that's gotten smaller. That's contracted. Yet the value of my circle in knowledge, in like-mindedness, in the things I've learned from this tighter circle has increased, exponentially. It's
Yep.
unbelievable.
You know what else increased is your ability with a shotgun.
This is true.
Seriously.
Let's come on. Give me a little credit. Let's say, sometimes the right tool helps. Just like if you want to control your capital, the right product is what you need to find to help you with the process of becoming your own banker. When it comes to shooting pheasant, you actually need a shotgun that's not used for home defense. You
Like
need
what he means, folks, is it needs to have a choke.
it needs some
The
choke. It
ability
needs
to
a
accept
choke.
a choke.
A Benelli Nova is with a choke
Yep.
is a lot better than a Remington 870 Express Magnum with a short barrel to try to hit those pheasant that are 15, 20 yards away.
Right. Although, full
Yeah.
disclosure, I did kill 4 birds with that.
You did. Yeah, I probably didn't.
They were close, though.
But no,
I actually,
we were.
you were on the other side of the field that year, but I ran toward one as it was coming toward me, just so I could get as close as possible.
You got to get real close.
Real close.
Yeah, but no, the right tool makes all the difference. Just like fixing your car, man. That's why I don't fix my own cars, because I never have the right tool. I'm just gonna take it in because it ain't worth it for me.
Right. Yep.
Yeah.
The right tool. So that's important. Good analogy.
Yeah, I'd say. But yeah, next year
When in Rome.
I'll have an even better tool next year when we go hunting.
Yeah. Let's talk about that after we get offline.
Yeah, I'll take some recommendations, but I'll be knocking them out knocking them out of the sky even quicker next year.
Yeah.
Yeah. Well, all right, man. Good talk. It was great seeing you. I know I get to see you again here soon for another short gathering. So
Yeah.
that'll be fun. Looking forward to that. You can come over, see the house. I'll show you my town.
Yeah, I'm going to sleep there.
Yeah, I know. I've got a place for you all set up in the mechanical room. There's a little sleeping bag in there. You got it.
Thanks.
Yeah, you bet. Yeah. All right, man. Cool. Everybody have a great week. Thanks for listening. And until next week, control your capital.
Or somebody else will.
Hey, thanks for listening, everybody. If you'd like to have a conversation with us to see how you can become your own banker, or if you have any questions or topics you'd like us to tackle in a future episode, please send us an email to davidandpaul@theibcguys.com.
And subscribe and leave us a review if you're on Apple. Follow and leave us a 5-star review if you're on Spotify. And please share this with your friends. We'll see you next week.